Hello, so today we are talking about equity agreements for employees and how you can structure them legally. Normally when we're talking about this, there are some other things that we won't get into today, but normally we are talking about an option agreement, which gives an employee the option to purchase shares in your company at a particular price, normally the current market value. This can be an unapproved scheme or an approved scheme. So an unapproved scheme, you simply put an option agreement in place. There are no tax advantages for the employees, but they are entitled to purchase shares maybe when certain goals are met, when they hit certain performance milestones, or when certain time constraints are met. So for example, if they've been with the organisation a year, they're entitled to buy 1% of shares, that kind of thing. It's a similar story for what's known as an approved option scheme or an EMI option scheme. That is where the scheme is approved by HMRC, and the reason it's an approved scheme is because it provides the employees with capital gains tax and sometimes some other tax benefits as well. You should take independent tax advice on that. However, if you're going to structure that legally, it is very important that you have a lawyer and an accountant working with you on this. Your accountant should reach out to HMRC to provide the valuation of the company and also to get pre-approval to ensure that the EMI scheme won't be a problem, that you can comply with the legislation. A lawyer like me would draft your EMI option rules, which are the rules that apply to the scheme. So for instance, what happens if someone leaves the organisation? Do they still get to keep their options to purchase shares? That kind of thing. There will also be an option agreement which sets out the specific terms for each employee. For example, you might want to give one employee 1% of shares, but the other employee 5%. That's the specifics that would be detailed in those option agreements. Once those agreements are all happy, we're happy with everything, they're sent out for signing and everything is teed off, the accountant then has to notify, or you, depending if you want to do it internally, notify HMRC annually as to which options are out there, which employees have options, and what the state of the option scheme looks like. So you have that annual reporting requirement. Generally speaking then, there's a little bit more admin with an EMI option scheme rather than an unapproved scheme. Bit more admin for you as a business owner, but it can be seen as more advantageous to employees because they do generally get those tax benefits that an unapproved scheme wouldn't allow. We've had a lot of business owners coming to speak to us about EMI option schemes in particular recently. If that's you and you're thinking about different creative ways to incentivise your staff, then drop me a message or comment below this video and we can have a chat about the best way to put that in place for your organisation.